Good morning and welcome, and thank you very much for joining us. My name's Stephen Jackson. I'm the head of sales for our compliance services here at NFU Energy, and we're very excited to be here this morning with Jerry from Sabre, our renewables partner, our power purchase partner, and we're excited to be talking to you about this blended power purchase service that Sabre is offering and we're partnering with. Before we dive in, a few quick housekeeping rules and points. So the presentation's being recorded, and we will make it available for viewing after this webinar this morning. Other than ourselves, myself, Jerry, your microphones, your cameras are all muted and turned off. And what we would ask is if you've got any questions during the presentation, please put them in the chat, and we will pick them up at the end of the presentation and do our best to answer them. Any that we don't get to during this morning's webinar, we will endeavour to come back to you and address after the event. Before I hand over to Jerry, just a quick introduction to NFU Energy. We are the energy consultancy arm of the NFU. We joined the NFU family about 7 or 8 years ago. We've been an energy consultancy business for many, many years before then, as an independent energy consultancy business. We're based in Stoneleigh in Warwickshire, so we're on the Stoneleigh Business Park, which is where the NFU's headquarters is. We have our own offices. We're literally a few hundred metres away from the NFU, and we're a team of about 55 people. We're made up of a contracts brokerage team. You can see the split of the sort of work that we get involved with on the slide there on the screen. But we have traditional brokerage services, so import contracts, export contracts of all shapes and sizes. So pretty much everybody has requirements for import energy contracts, if not export energy contracts. So if you've not spoken to our team, please give us a call, have a chat with us, and see what sort of prices we can give you when your contracts are due for renewal. If nothing else, you can take those away and compare them with what you're being offered by other providers. We then have a team of expert energy engineers that spend a lot of time helping our clients and customers with their energy compliance requirements. The energy sector is chock full of energy compliance requirements. It can be baffling for those that are not working in it day in, day out. We have a team of people that are expert in all areas and manner of things to do with energy compliance. So again, if you've got any questions in that regard, give us a call, have a chat with us, and I'm sure we can give you some advice and support. We have tech admin, and our tech admin team deliver services such as data submission work for those on the RHI scheme and feed-in tariff schemes, amongst others. And then we have the commercial team, of which I sit within, a sales and marketing team, and obviously our admin support. So to our work with Sabre, and why we formed this relationship now. We've been working in the renewable space for a good number of years now, and we partner with various installers of renewables equipment to help our customers implement renewables projects. Quite often we're involved in the upfront feasibility work and advice and support, but we wanted to go further than that and offer access to the practical means of installing these projects, because it can be a bit of an area to navigate, and knowing who to work with and who to trust and who's responsible can help enormously when you're making these decisions. But in that process, it's become clear to us that not everybody has access to funds to invest in these renewables projects. And so it's important to be able to offer alternative funding sources. And really, what we're pleased to talk about is the offering that Sabre is bringing to market. It's quite unique in many respects, and it does offer a very interesting alternative way to fund renewables projects, and help future-proof your business. So without further ado, I'm going to hand over to Jerry, and Jerry will take us through what Sabre can offer. Thanks, Jerry.
I'm going to switch to my audio. That should be. Yeah, so apologies, audio's back on. So we'll get started today. We'll start with a little bit of an introduction to Sabre Renewable Energy. Our company was formed to address what we believe is a niche area within the funding sector, primarily for renewable deployment throughout the UK. We're dedicated to supporting the UK's farming community, looking at renewable energy solutions tailored to the unique challenges within this sector. So we provide guidance, partnerships, funding options. Sabre Renewable will help smallholding, smaller farms across the whole sector. The primary aim is to help reduce costs, enhance sustainability, and help the sector gain energy independence. During the slides that we're going to walk through this morning, we'll look to showcase the benefits of renewable energy for farms of all scales and varying operational needs. So looking at everything from major energy consumers to small holdings with smaller energy consumption needs. We'll look at some practical case studies and examples of how a PPA can benefit your business. We'll then answer common questions from a PPA perspective and hopefully assist you in taking the next step forward towards clean energy adoption. The slides will be shared at the end of the meeting today. We will take a Q&A session at the end of the call, and obviously Stephen and the team at NFU Energy will assist any follow-up inquiries. Looking at Sabre Renewable Energy and what we primarily do that's different from traditional funding within this sector. So we specialise in delivering customised renewable energy solutions to businesses. The focus is on helping clients reduce energy costs through efficient systems, enhance sustainability by meeting environmental targets and ensuring reliability with seamlessly integrated solutions. Sabre partners with businesses to create energy strategies that drive both financial and environmental success. Good opportunity perhaps to give you a little bit of insight into the funding marketplace and where Sabre sits within that. For everybody's information, within the UK there's 8 primary PPA funds. That's made up of institutional funding, pension funding, infrastructure funding, and the aim is to fund technologies within the renewable sector. A lot of challenges exist within that process that perhaps make the adoption into renewable energy via a funding mechanism a little bit clunky. Sabre looks at the marketplace and tries to speed up the process from the concept of helping your farm transition to renewable energy to actually agreeing a PPA that can work and then deploying that PPA. So we're looking to speed that process up. Average term in the marketplace is sort of 9 months from conception to actually having a technology deployed. We're aiming to bring that down to 5 months. We're working very closely with NFU Energy. We're building bespoke PPA solutions specifically for the farming sector. We're helping you from a sustainability support point of view, and we're providing a comprehensive turnkey service that is supported from looking at a project, developing that project, on-site surveys completed by the team at NFU Energy, and getting projects deployed as quickly as possible so you can feel both the environmental benefits and the financial benefits specifically for your business. When we're looking at support for small farms, it's about tailoring solutions, supporting the deployment of those solutions, managing and maintaining those technologies. Everything is aimed at making this process as affordable as possible. Initially, we start by looking at your existing energy needs, how you consume energy, how much energy you consume, and we're looking at how we can assist not just a short or medium term, but a long-term strategy to improving your environmental position, reducing your CO2, and most importantly, protecting you from the volatility that exists within the energy marketplace. Financial assistance is then offered, and we will develop what we call a flexible PPA option. We're going to come to PPA in a few minutes and explain exactly what a PPA agreement is. Initially, it means that you can deploy technology without any upfront costs. We then aim to deploy the technology itself, but not only that, because the asset remains within our ownership, we provide expert installation, full O&M support for optimal performance moving forward. So it's a great way to deploy technologies that perhaps you were apprehensive about doing it in the past, or you've heard horror stories from other technologies that have been deployed. One of the key benefits with a PPA is all of the maintenance monitoring of the actual technology itself is covered within the PPA agreement. When we look at specifically tailoring solutions for the farming community, let's look at some of the challenges that you face within the sector. So we may be looking at limited space, so we have to come up with a solution that requires compact, efficient energy systems that we can deploy within limited areas. For example, we may not be dealing with extremely large factory roof spaces. We may be dealing with much smaller barns, smaller ground mount solar solutions. So we take into account what challenges are there. There'll obviously be budget constraints. What we're providing is cost-effective investment options to enhance, improve, and maybe even expand your existing business. And as I said, from a management maintenance point of view, all of the maintenance of the renewable energy technology is covered within the agreement. So we're going to look at developing adaptable technologies, space-efficient systems, solar panels, looking at much smaller CHP installations. We're going to offer that financial support via PPAs to help negate any upfront costs. And then we're going to provide 24/7 long-term performance and support. When we deploy a technology on site, we have access to that technology. We're aiming to ensure that the technology is producing both the financial benefits and the environmental benefits that were promised during the initial discussions. You will have access to online portals. You can see your technology, be it solar, be it CHP, be it batteries, all working in tandem with your existing consumption of energy. and you can track the benefit of that and obviously share that with your supply chain to show that you are making tentative steps into more environmentally friendly business operation practices. Getting on to a power purchase agreement. So in its most simple terms, a power purchase agreement is where Sabre, the funder in this case, commission, install and maintain a renewable energy system at your site for no capital outlay whatsoever. The concept of a power purchase agreement is you are agreeing to purchase the energy that the technology produces, and you're doing so at a much, much more competitive price than you can from the grid. So I'll expand on that a little bit. Let's say you're looking at a medium-sized solar deployment for your business. Traditionally, you can fund that via your own capital. You could look to a bank or an asset finance company to finance that technology over a period of time, or you can look at what we call a power purchase agreement. You're now looking at no upfront cost whatsoever. The solar will produce energy that you consume on site rather than purchase energy from the grid. You're paying for the energy that the solar produces on site, but you will be paying on average 50% less for that energy than you would if you were purchasing that energy from the grid. We're going to look and talk briefly about multiple technologies that we deploy, but in principle, really, really straightforward. You don't have to invest your own capital. Someone else is investing in the technology, and you are experiencing on-site benefits. You're reducing your need for grid. You're purchasing energy at a much lower cost from the grid, compared to the grid, sorry. You're protecting your business from the volatility that sits within the energy marketplace because you're now producing your own on-site energy, be it electric, be it heat, be it cooling, all of the technologies that we'll cover shortly. So a PPA, especially within manufacturing, the farming sector, currently 80% of renewable deployment in Europe is funded via power purchase agreements. It's becoming much, much more common. Businesses are all struggling from financial aspects, and anything a business can do to improve their base position and efficiency without releasing capital is a real positive for this sector. Let's touch on briefly the technologies that we look to fund. So we provide a diverse range of renewable energy technologies. Each are tailored specifically to meet the unique needs of farmers. So we'll look a little bit closer and talk about some of the key technologies, look at the work that this will help deliver sustainability, produce cost-effective energy, all aimed at energy solutions tailored for modern farming. Core technology that everybody turns to on renewables is solar PV. Solar PV, I've been working in this sector now for almost 20 years. Panels are now almost 5 times more efficient as they were going back to 2013, 2014. We deploy solar panels on roofs, on ground mount, on carports. We have mobile solar facilities now that we move from location to location. The next most common technology that you would deploy would be battery technology. So solar panels are seasonal in as much as the majority of your solar harvest occurs during the spring and summer. So for 8 months of the year, your solar is producing large amounts of energy. It's not obviously when the sun's not shining, when it's not daylight, sorry. So that's when you would adopt a battery. So perhaps you're not consuming all of the solar that's being produced today. That energy is being diverted to a battery. You can then consume the energy from the battery when we're no longer in daylight hours. Another great technology that we work on specifically, well, across many sectors, but real advantages within the farming sector is CHP, which is an abbreviation for a combined heat and power unit. So basically you're looking at an engine that is producing electric. So we power the engine either with mains gas, biogas, LPG, for example, and that engine will run and produce electric. The byproduct of the engine can be everything from heat to cooling to oxygen to steam. So you're running an engine to produce electric. Your byproduct or your waste product can also be recouped for the benefit of the business via heating, cooling, etc. Similar concept to solar. We deploy the asset, it produces electric. You benefit from free waste heat, cooling, steam, or whatever you require. But the key benefit here is, again, you're purchasing the energy much more competitively than you are from the grid. So how can farmers specifically benefit? We're looking at reducing energy costs to improve profitability, perhaps using unused land or unused rooftops to generate income. We're also turning agricultural waste into energy with biomass systems, for example. So we're really enhancing energy independence and reducing reliance on your traditional route to energy, which is the grid. One of the unique things about Sabre and what we've decided to do with NFU Energy is support PPAs on a much smaller scale. So you may or may not have heard of PPA funding in the past. As I said, there's 8 funders, but there'll be many renewable energy companies offering you PPAs. What you'll find is the majority of those companies out there will never support a power purchase agreement, for example, on solar less than 100 kilowatt. So we, looking at the subscriber base of NFU Energy, that's really where we wanted to assist. So an average small holding in the UK will have energy consumption, let's say 40 to 60,000 kilowatt hours of electric per year. On that basis, I look at a 25 kilowatt solar array being an absolutely amazing asset to deploy on your business for all of the reasons that we just mentioned previously. And Sabre will fully support PPAs down to that level. We deploy the asset. You now have a future-proofed infrastructure on site. We will also look at building remediation costs into the PPA. For example, if you had a barn or a building that had an old asbestos roof, or the roof needed replacement for whatever reason, we can look at the cost of replacing that roof and covering that roof within a PPA model. So ultimately, you're improving your site, you're future-proofing your site, you're now deploying renewable energy on a roof that required improvement, and you have no physical cost up front. There would obviously be an increase in the PPA price, but it would still be extremely competitive against your current grid prices. We can look at upgrading your capabilities. So we can look at improving equipment within your farm. We can look at equipment that's going to improve the overall efficiency, and we can provide cutting-edge solutions tailored specifically to your needs and wrap those within what we call a bespoke PPA. We can also assist you expanding your facilities. Let's say I'm just trying to think of a recent engagement. So I was looking at a farm who had, they were looking at a bed and breakfast route for pigs, and they were desperate to expand their business operations based on demand, but there was challenges raising the capital to build that new facility or to build those new sheds. So we're able to look at the cost of the shed, as long as we're deploying renewable assets alongside that, and build that solution within a PPA model to help you expand your business opportunity as well. So looking at the key benefits from a PPA perspective. So Saber's Power Purchase Agreement offers sustainability, cost savings, and energy independence, or a proportion of energy independence from the grid. There's no upfront investment. It reduces your carbon emissions and ensures long-term energy security. So we'll look at the benefits of bespoke PPAs, blended PPAs. Blended PPAs, just for everybody's information, and it's a really important part. Sabre are the only fund within the European PPA space that will fund what we call blended technologies. Traditionally, funders will only look at solar, or they will only look at battery, or they will only look at CHP, for example. In our case, where we see an opportunity where we can deploy multiple technologies together, we will do so under what we call the blended PPA. And that means we're producing much more energy on site, recouping energy from that process itself, and ultimately providing you energy at an even more competitive price. So we're looking at this from a sustainability and your climate commitments, cost savings and market stability, and energy independence, and being able to future-proof your business away from a proportion of that volatility. Some common questions that will help us when it comes to PPA. So a standard PPA term is 25 years, but that can be reviewed on a case-by-case basis. So within the industry, it's standard for a solar PPA to be 25 years and a CHP, for example, to be 15 years. But as I said earlier, we're looking to provide bespoke solutions alongside your ambition. Once the term of a PPA is complete, the asset ownership transfers to you, and the energy generated from that point forward is free of charge. So if we look at full solar, for an example, and you had a 25-year PPA, but you have technology with a life expectancy of 40 years plus. So at the end of the PPA term, that technology is an asset of your business, and all of the benefits that that asset produces go straight to your bottom line. If you had a PPA and the site was sold, the agreement can be transferred to the new owner. They will want to be able to generate clean, cheap, green energy, and a PPA will always add value to a site. So ownership transfer is never challenging. The actual agreed price of a PPA is CPI linked and is capped at 3%. I just want to touch on that for a moment. So consumer price index linking will scare people from the point of view of, well, if consumer price indexing is increasing at a rate of knots, then your energy prices will increase alongside that. Within a PPA, everything is aimed to enhance the benefit for the tenant of the PPA. So in this case, if CPI was at 9%, Sabre cannot increase its PPA rate by more than 3%. So you're always protected from the point of view of your PPA rate is protected. It's going to rise over the course of the term, but it's not linked to any of the volatility that we've seen over this last few years. A system can be designed to meet any size, but when you're looking at small holdings, an average of 40,000 kilowatts consumption of electric per year is sufficient to warrant the deployment of technology under a PPA agreement. If something was to happen to Sabre and Sabre discontinued, then the system stays operational. Energy payments are transferred to our insurance providers. So within every asset that we deploy in the UK, every asset sits within its own protected bubble, let's say, that has a fully protected insurance wrap around that. So if for any reason Sabre no longer existed, an insurance policy kicks in, protects the asset, and takes over the PPA agreement at that time. Really important to focus on all operations and maintenance is provided by Sabre. The technology is constantly monitored, giving you access to live data performance, always ensuring that we're hitting at least the minimum forecasted production of energy and therefore savings to your business. When we're looking at trying to assist you on the first steps on this journey, there's some basic information Stephen and the team at NFU Energy will require. They'll help you pull together location, Google images, and verify the ownership of the business itself. We'll look to understand your current energy costs, your current tariffs, and your contract and when that's up for renewal, so we can look at building the most updated figures into your PPA forecast. We'll look at how you consume energy, look at your utility bills, half-hourly data if available. We're generally trying to build up an understanding of your energy profile. And most importantly, we want to know what's your ambitions, what are your goals, what is the specific reasons you're looking to improve your efficiency, run your business more environmentally friendly, or expand and develop the business. All of these things are taken into account during the feasibility stage that hopefully we'll be speaking to you over the coming weeks. I'll touch through in a couple of really basic case studies that will help you understand PPAs. So a couple of the first clients that we worked with NFU Energy. First case study is Blended Farm, which is a poultry farm in mid-Wales. We're looking at an asset that has a number of sheds currently deployed. They have a little bit of solar deployed on one of the early sheds that was built. And now what the business is looking to do is expand by building 2 new sheds. So on those 2 sheds, what we're looking at doing is deploying 100 kilowatt of solar. So you have 2 new sheds going up. There's solar being deployed on those sheds. That means when you're looking at those sheds and the cost of energy that they're going to consume over the period of time, building those assets and operating those assets will be much more efficient. So in that case, these 2 sheds, 100 kilowatt of solar, we're providing Blended Farm with a PPA price of 9.8 pence. That provides energy savings of 59% to Blended Farm. And over the course of the PPA term, that's average annual savings of £26,000 per year, or calculated over the 25-year term, it's savings of 650,000. If you look at the lifetime production of that asset, it'll produce just under 3 gig of energy, of electric, over the 35 years of production. Year 1, it will offset 90,000 kilowatt hours that would have been purchased from grid at circa 22-24 pence per kilowatt. It's saving the farm 25 tons of CO2 year 1, and the total benefit over an average 35-year term is almost 1.5 million. Another case study involved a little bit of remediation work. So Cookson Farm, again looking at a need to deploy solar, but there was issues with the roof. So we're looking at 50 kilowatts of solar, a capital contribution of £25,000 to improve the roof. So that's roof is repaired, there's no capital outlay. We're improving the site infrastructure, increasing the site's value, reducing the utility costs, lowering the grid reliance, creating green energy, future-proofing the site, and saving carbon. The figures on Cookson Farm, so because we've had to inject £25,000 for the re-roof, it's a slightly higher PPA price at 16 pence, but that's still 43% below grid price. Average cost saving over the term is almost £9,000 per year, and the total savings over the term of the PPA is 214,000. System will produce 1.5 gig over the 35 years of life expectancy, produce 50,000 kilowatt hours year 1, save 14 tons of carbon, and over a 35-year period, save the business over £600,000. If we just reflect on that for a moment, that's a major improvement to that business. A major remediation has been funded as part of the PPA. We're replacing the roof, deploying solar, and still have the ability to sell energy to Cookson Farm 43% cheaper than Cookson's can buy it from the grid. So we're very much looking at future-proofing farms. Farms can adapt to climate change, look to build long-term resilience with renewable energy solutions that help stabilize costs, lower emissions, and enhance efficiency. The future of farming renewable energy trends, we're looking at emerging trends like smart farm tech, agro-photovoltaics, carbon credits. These all provide solutions or opportunities that we can assist future-proofing farms. So we're looking to adapt to climate change with resilient solutions. Renewable energy ensures consistent power, reduces grid reliance, and supports sustainable practices to tackle climate challenges. We're looking at scaling operations with sustainable energy so you can grow your farm more sustainably with modular energy systems, efficient infrastructure, and integrated renewable solutions to meet future demands. So hopefully those slides weren't too complicated. It'll give you a brief into what we can achieve on our PPA solution alongside NFU Energy. Look forward now to answering any questions you may have straight away, but more importantly, look forward to fielding questions after the slides have been shared with you and hopefully assisting some feasibility studies on your farms over the coming weeks.
Jerry, thank you very much for that. Thank you very much for your talk this morning. I think hopefully everybody found that really interesting. If there are any questions, can you pop them in the chat box there and we'll address them now. We don't have any at the moment, but I do have a few questions, Jerry, if I can ask you. The first one's a real simple one. Where do these funds come from? Where are they originating?
So that's a really interesting question. From an ESG point of view, so from Saber's environmental social governance strategy, it's really important that we're securing funds from green institutions. One of our funders is a primary bank that's the only green bank within the funding mechanism. You'll have infrastructure funds, Stephen, that are looking to assist with infrastructure deployment within the UK space. So we're very, very clear that our funding has to come from environmentally sound solutions, that we then take those funds and deploy those in an ethical, sustainable way. So many different sources with the benchmark that we're using, green funding initiatives. That's heart and soul of who we are.
Thank you for that. That makes things a little clearer. We've got a couple of questions that have come in, so let's ask those. So the first one is to do, can a PPA include holiday lets and farmhouse?
PPA is suitable for any commercial activity that, so within your business you have farmlets that are consuming energy. That's a commercial transaction within your business, so that qualifies. Let's say you had a base load within your business of 100,000 kilowatt hours. Perhaps 80,000 of those kilowatt hours are being used in your day-to-day operations from a farming perspective, but 20,000 of those kilowatt hours are going to a holiday let on site. That's perfect, that's within your scope. The only thing a PPA cannot fund is domestic activity. Any commercial activity, yes, it can. So you deploying a renewable asset on site, that asset is producing energy for anything that you consume on your side of the meter, which is perfectly fine within the mechanism of a PPA.
Okay. Well, thank you for that. I hope that answers your question, Bob. But if you've got any further questions, then please just give us a call after this. We'll be happy to talk to you. A question from David: can tenant farmers apply for a PPA? That's a good question that often comes up.
Yes, of course. If you look at our activity in mainstream commercial work, David, many of our PPA clients are tenants of landlords within manufacturing sites, etc. What we have to do within the PPA is notify the landowner or the landlord of what we're intending to do on site. And any landlord-tenant relationship, that's primarily embraced because it improves the efficiency of your business. If your business is more efficient, it's more profitable, and therefore you stay as a tenant within that arrangement for longer. So no problem at all, David.
Excellent. Okay, thank you. And David Barnes asks if this would affect feed-in tariff agreements that they already have.
Depends on the technology that you're looking at. So at the minute you have, let's say the feed-in is to biomass system or solar. Expanding your deployment of renewables on site does not affect your current FIT agreement. The only way it will affect your current FIT agreement if you decided to blend those technologies together, which we wouldn't obviously do because you would lose your FIT payments. But no, on specific cases like that, I don't see any reason why we can't assist. Obviously, Stephen and the team will help. Once I have a better understanding of your specific site, David, we'll get you on that. But in principle, no reason why we can't look at a PPA to develop this site even further.
Excellent. Excellent. Thank you for that. We've got some really good questions coming in. So the next one there is to do with the life expectancies of PV and CHP systems and batteries. And really the question is, how generous is that transfer of assets after the 15 or 25 years of the PPA contract?
When you say generous, it's a token transaction. So the mechanics of a solar PPA agreement end of life is where we basically relinquish ownership of the asset and transfer that asset to your business. Solar traditionally 25 years. CHP slightly different. Perhaps a point I missed during our slides. CHP, you're always looking at a maximum of 15 years. Engines will require a complete rebuild at the end of 15 years. So we always align a PPA around the 15-year period. So during the 15 years of the PPA, all operations and maintenance fall to us. So at the end of a CHP PPA, let's say we're at year 15, we would either replace the PPA, replace the engine, and start a new PPA agreement, or you, the business owner, would take ownership of that asset. You may refurbish the engine yourself, and you may decide that the financial benefits that you've enjoyed previously, you want to keep that benefit for yourself moving forward, and you may well invest into that end of term PPA. Is a really, really simple transaction. Ownership transfers from Sabre to your business. It's that simple.
Excellent. Okay, thank you, Jerry. Jonathan asks, who benefits from any electricity produced that is not used on farm and exported to the grid? It's a good question, and I guess just in addition to that, is there a sort of minimum threshold that you're looking for in terms of the amount of energy being used on site for these agreements?
Yeah, so when it comes to PPAs, you always want the consumer of the energy that you're producing to consume at least 75% of the energy that's being produced. If you go the wrong side of that, it negates the figures to an extent where you would be paying a higher PPA rate. The great thing about working with the team at NFU Energy, we're going to collate all of that data for you, and we're going to look at sizing the asset in line with your current consumption. But we're not limiting it, because let's say you develop your business even further, 2 years now, add new technology or continue your journey into electrification, and you start to consume much, much more power. We can simply expand the asset at that stage and update the PPA terms. So in simple terms, the larger the asset, the more energy you're consuming, the lower the PPA rate. So we would never want to place you in a position where you're not enjoying the maximum benefit from the asset that we've deployed.
Excellent, thank you. And yes, one last question. So in the two case studies that you've shown this morning, one of the farmers is paying 8 pence for their PPA rate, second one 16 pence. The question is, what does the PPA price mean in annual total cost to be paid by the farmer under these two case studies? And then there's a secondary question that perhaps we can come back to.
Okay, so the first case scenario, I believe perhaps you want to go back to the slide, Tom, which is 4 slides back. So the Dell farm is looking at a PPA price of 9.8 pence. So if we try and simplify that, the 9.8 pence that we're charging for electric is 59% cheaper than William can purchase energy from the grid. So if William produces William consumes 90,000 kilowatt hours year one. Let's just do the basic math for the purpose of that question. So we're now buying 90,000 units at 0.98. So that's £8,200 per year versus that would have cost the client in the region of £21,000 had they purchased from the grid. So it's a variance of £11,000, just over £11,000 of money that would have been paid via your NFU energy contract that you're now saving because you're producing it on site and purchasing it at a much, much cheaper rate. Moving on to Cookson's farm, the primary reason for the difference is the fact that not only are we deploying solar, we're investing £25,000 of capital into a roof replacement. So let's just look at that. That farm cannot deploy solar because the roof is not in a fit state to accommodate solar. We replace the roof, we place solar on the new roof, so it's a much higher capital outlay. But the business has benefited in so many ways from future-proofing the site. The structure is now watertight again. We're now producing energy from that roof. And even after doing all of these things, you're looking at a £9,000 year one saving against grid prices. Stephen, there was a secondary question.
Yes, a very simple one, I think. Can agreements be made with non-farm businesses stroke public sector bodies?
Of course.
And we just have one other question, which I think will have a quick answer. Can we include wind turbines in this PPA model, that technology?
If we're looking at core technology, yes. Saber's position is we're completely technology agnostic.
Okay.
And we want to, that covers acquiring stranded assets, Stephen. So let's say you had an asset deployed a number of years ago, you've had challenges with that, or you want to generate a capital injection into your business. Saber will look at acquiring your existing asset, refurbishing where necessary, injecting that capital back into your business and still providing you with a really cost-effective PPA solution moving forward. Technology will look at all technology.
Excellent. And perhaps that particular model is of interest to those out there that have taken that step into turbine technology, perhaps in the early days. So yeah, if that's of interest, then come back to us and have a chat. We are rapidly running out of time, so we've not quite got to all the questions, but we will come back to you, David, and address that question. Really, it's time to wrap up now and say thank you very much to Jerry, and we're really grateful for you coming and talking to us this morning. To you, our audience, thank you very much for your time. We know that you are busy people, so we really appreciate you giving the time to talk to us this morning. I hope it's of interest, and please give us a call on the number that you can see there on the screen in front of you, or drop us an email, ask to speak to myself, Stephen Jackson, and I'll be delighted to talk to you. Thank you very much. Have a good morning. Goodbye.
Thanks.